Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Today we have a topic which is implicit cost. I mean, this kind of terms people are not very much well versed with. Let's try and understand so that you have an insight regarding this particular term. See, as the name implies, implicit cost, it do not represent any sort of real expenses. Be very sure about it. It did not represent any sort of real expenses, but they are considered as a form of opportunity, and it's a form of the opportunity cost, you can say, for utilization of companies' assets and or resources in general. So like for instance, if he sets up a production plant on its own land, by implication it does not earn any possible rent on the same property. But if it were not to use the resource, that's the case. Now it must be borne in mind that here the implicit costs do not represent any sort of expenses. Be very sure about. However, the utility of the measure lies in the fact that it helps to evaluate if a particular resource could have been employed at a better, or could have been employed better. Let's understand the difference between the implicit and the explicit cost. See, to understand the implicit cost, it would be necessary to understand the thing called explicit costs. Now what exactly this is, which this kind of I mean, you have to learn explicit costs as well, which are out of pocket expenses, and they are incurred on the business activities and operations basically. So I'll just write over here out of expenses. Yeah, by contrast, if you see, implicit cost, they help to exactly to take to an account probable alternative use of resources and returns thereof. So the cost incurred for a company typically represents the sum total of explicit cost and implicit cost. Now, what exactly is the use and relevance of this kind of explicit and implicit cost? See, to understand the relevance of these two types of costs, it is important to know that they are widely employed to calculate different types of profit. So there are several ways of defining the profit, and the two of them are what we call as the accounting profit, and second is the economic profit. So what is accounting profit? Okay, it is calculated by deducting any sort of explicit costs from its total revenue. So I'll just move over here. So it's going to be revenue minus your explicit cost. Now this represents the calculation of profit taking into account real expenses incurred on running the business operations. But what about economic profit? See, it can only be calculated by deducting both explicit and implicit costs from the revenue less implicit and explicit costs, right? So that is the thing. You have to deduct both of them to give a better idea whether the resource were employed profitably and enough, or they could have been employed better. So economic profit tends to be, usually you can say it tends to be lower than the accounting profit. Most of the time, you can say that. Now, how to calculate the implicit costs? That's the question. See, if renting out a fixed asset could result in higher earnings as compared to what a company earns by utilizing the fixed assets for the operation, it means that the company is losing in terms of the economic profit. And in simple words, there is no use of employing its own building for running its operations. So if a company cannot earn more than the implicit cost of renting it out, the problem with calculating the implicit cost is that they are often hard to quantify, right? They are hard to quantify. They do not figure on the financial statement of the company, are generally more or less intangible. So other typical examples of implicit cost would be time and resources, and they are invested in training and employee, depreciation of the equipment, and so on and so forth. Although the depreciation could still be technically considered as the explicit cost by some, because it is basically represents realistic capital consumption for a resource which a real expense was made. So even if it was made earlier, I'll give you an example of implicit cost so that you may understand this. Now let's say there is a company called ABC, and ABC has invested, let's say, a sum of $10,000 in certain type of business with a view of earning a probable profit. This amount is the investment amount. What is the probable, we say, profits? Well, that is $5,000 in a year. However, to make this kind of profit, he has to forego the interest he could earn on the same. So let's suppose that he has to forego, let's say, 12% as a part of the interest, which would have been worked out. Let's say the interest will be 12%, so 1200, right? So this 1200 basically represents the implicit cost of investing the sum elsewhere. This exactly is the meaning, implicit cost, and I've tried to explain you the uses, the characteristics, the comparison, or probably what exactly is the role of explicit cost over here. So our topic seems quite concise here, and that is it for this particular topic. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.